The Agweek Market Wrap is sponsored by Gateway Building Systems.
Welcome to the Agweek Market Wrap, brought to you by Gateway Building Systems. I'm Jamie Dickerman with the Red River Farm Network, and we're joined once again by Randy Martinson of Martinson Risk Management in Fargo. And Randy, I'll tell you, it's another one of those weeks again with the markets, and there's a lot of anticipation surrounding the report that came out, and we're getting this done here just after those numbers came out. The WASDE we're talking about, after having to wait so long to get an updated report, we finally got one. Your thoughts initially as you saw it?
Well, we kind of expected that USDA wouldn't come in and make a lot of changes because they haven't been back to work for that long, so they haven't had a chance to compile a lot of numbers for this report. They do know, what the net kind of is for, increases or decrease for exports. Yield, we knew we were going to see a little bit of an adjustment to it, but we figured that was be about the only numbers that we would see change in this, and that pretty much was the numbers we saw change. Crush was adjusted for soybeans, but in the end, looking at the numbers, as far as wheat, it was a little negative because we took in the increase in production that we saw from the small grain summary report. That came in and that built stocks up, and it was actually a little bit negative on the wheat order. Wheat kind of responded in kind. Corn number turned out to be a little bit negative as well, as we cut feed demand in old crop, and came in with a lot bigger beginning stocks for this year. We did see exports increase for corn, which was a little bit friendly, but in the end, that number was neutral to a little bit negative. And then in soybeans, the numbers looked really good looking through most of it. We saw some adjustments to old crop production. We did see the crush improve for old crop. But for new crop, we lowered exports by 50 million bushels. And I think that was the negative tone that came in and is pulling the soybean market down.
Yeah, because the markets definitely took notice right away when this report came out.
It did. I mean, we started to slowly stair step our way down, but we went down, hit 15 lower in soybeans pretty quick. And I think we're looking at 8 to 7 lowers in that area for corn, and of course the wheat market's about the same as the corn. So in all, I think it was more likely a buying the rumor. Now we're selling the fact that we're seeing the numbers. They weren't terribly bearish numbers, but they were a little bit on the negative side, and that is kind of pulling some of the enthusiasm out of the market here today.
Well, and earlier today, it was kind of interesting to see how wheat started off today, and that was there was a report about military action over Ukraine and Russia again, and so that kind of made the wheat market jump a little bit. Didn't last long though.
Right. The rumor or the talk is that Ukraine bombed or sent drones in and attacked a hub for grain and oil exports in the Black Sea for Russia, and that sent both crude oil market and the wheat market up a little bit and helped support the market. But as you mentioned, now that crude oil is still holding with a little bit of gains, but of course the wheat and the grains have faded because of the USDA report. And also, what was interesting, USDA also came in with their flash export sales, since the government went on shutdown till now. So we got an idea, or at least a glimpse, of what the flash sales have been. And that's any sale that's over 100,000 metric ton that has to be reported to the Commerce Department because of the size of it. And then what's interesting is that China shows up on there buying 332,000 metric ton of soybeans, which a little bit was bought just before the trade deal was signed. The rest was bought right after the trade deal was signed. So they haven't been in and bought much. And then unknown destinations come in at 616,000 metric ton. So soybean sales have been kind of weak for this month and a half that we've seen the government shut down.
Yeah, and I think everybody's kind of taking notice of that now, and so now again, much of the same. We're still saying kind of the same thing, whereas we're still really waiting to see China really come up and do what they said they were going to do.
It's a hurry up and wait game. We're waiting to see if China's going to come in and honor the agreement, which as of now, we're not seeing that they've come in and bought a lot of product. Now, they could have been buying smaller amounts, or COFCO could have been come in buying this and taking them as cash grain commitments and not hit the export market yet. But at this point, it looks a little bit concerning that China isn't going to get that 12 million metric ton by January. And the report this week is also that China's got huge stocks of soybeans and that it's not likely they're going to need a lot in the short term. So all that's kind of leading up to a little bit of concern about the China trade deal.
And, again, this week we've seen it as we have been seeing it with the cattle market continuing to just be extremely volatile, and it'll start one way, end a completely different way. And we've seen it like that for the longest time now. It seems like that just keeps repeating itself. Did you see anything in that report that warranted any surprise as far as cattle, beef numbers, anything like that?
No, not really. Kind of the joke in the office is that cattle are on a 20-minute cycle. Every 20 minutes, we're changing direction that we're trading. We're up for 20 minutes, then we're down for 20. And it seems like that's the pattern that's set up. But I think, for the most part, the cattle, I think, are continuing to respond to headlines. It's the press that's coming in, or it's the news that comes in with, now we're getting close to having a trade deal done with Brazil. And I think that put pressure on. But the fact that we're not opening the border because of the screwworm, that we are going to help Mexico try to control the screwworm by, doing a joint venture with, setting up for that sterile facility for making the flies. But overall, I think this market is still seeing fund liquidation, and that's really what's been driving it.
And so, and it doesn't look like that's really going to change much here. We're going to kind of continue to be in this pattern, aren't we?
I think so. When you look at, we also look at technicals, the chart formations that we see, and it does look like cattle have hit a low spot right now. So it looks like we've hit support. Hopefully, we'll see a little bit of a bounce off of that. But yesterday we did see, the December corn and the November soy or the January soybeans both trade above long time resistance levels. Of course, today we fading below it, but we'll see now if this fade today holds next week. But because right now, technically, we do have a good stance as far as corn and soybeans are concerned, and the cattle for that matter.
So now we've got this report in the rear view window, and so now we look ahead here. We're going to start to get more information here, so it's going to kind of go back to normal a little bit, maybe.
A little bit, we're going to see the export sales numbers come out, on I think every couple day rotation so that we can get caught up to the current export sales numbers. We're not going to see them, we won't be caught up until January, but at least we're going to start seeing the reports come into play. Inspections will continue to be updated. And then now we'll start to see, the commitment of traders report, which is going to be huge to let us know the position that the funds are holding. And we'll also then see WASDE reports coming out on a monthly basis.
So looking at the markets here, what do you anticipate to see here as we move forward now from this, as we look into next week? Do you expect to see the more volatility continue? Where do you see things going?
I think, yeah, I think we will, and especially we're going to be more, I think, aware of what's going to be happening with China. I mean, that's really going to be what's driving it now, because if China doesn't start showing up to buy soybeans here in the short term, which in the next couple of weeks, that idea of that trade deal is going to become less and less likely. And I think that's really going to be what the market focuses on now. We've had some good levels, we've had some good pushes in this market. You know, Producers have rewarded it, and that I think is adding to a little bit of the pressure here today. But right now, it's all going to fall in, where China is going to be as far as the export market is concerned.
All right. Well, Randy, always great having you on. Thanks for your time and input. We always appreciate it.
All right, thank you.
Randy Martinson, president of Martinson Ag Risk Management, for markets and market analysis throughout the week. You can listen to your local Red River Farm Network radio station affiliate. You can also visit our website, rrfn.com. The Agweek Market Wrap brought to you by Gateway Building Systems.